Here we go, guys. A lot of calls for gold and silver and maybe even copper. We'll get into that here lately. But first, before we look at gold, silver, copper, we really need to look at the DXY US dollar currency index. And with this one, we like to look at the weekly. Okay. Now, looking strictly at the location on the chart, you see, we've come up, made a high, pull back a little bit, then made a lower high. So we could be possibly, if you remember how markets reverse, and here's an example, well, a couple of them right here just looking, V shape, V shape, and then also you have your W formation, low, higher low, okay? So your V's, your W's, also one where you come down, trade sideways, and then start, coming back up. Because when you get far and away from all this pain over here, of the bear market, time heals all, they say anyway. But right here, as you can see, it looks like we might be possibly putting in a M formation where you have a high, lower high. And then when you take out that bottom pivot, you a lot of times waterfall a lot quicker to the downside. Okay. But we also have to pull up, be fair, pull up the other moving averages. See the 50s right there on the weekly chart. See every candle is 1 week of price action. And the 50 could, as close as it is, could provide a little bit of support. What we're trying to do is find a fail zone where the dollar would actually fail and continue, a hard push to the downside, which, of course, could possibly, help gold and silver continue to the upside. And a target maybe down here, but we're going to have to clear this area first. So it might not be, a bad idea to keep an eye on the dollar. Now, every so often, gold and silver will decouple. In other words, they'll do the opposite of what you're thinking they should be doing here, with the dollar, in other words. Okay. So let's put all that on. And as you can see, we already have that kind of lined out. And then we'll put our trend line up here. Now, once you hit one pivot, second pivot, on the second pivot, then you have what's called a reliable and valid trend line, okay? And normally, I'll say normally, see, it's already hit right here the third time. So 1, 2, 3. Normally, you will do the same, the price will do the same thing it did the first two hits, okay? Bounce, bounce, bounce. But when you get into the fourth or fifth hit, a lot of times it'll break that support. So, something to consider and watch for. Now let's go to the daily and look at gold here. And what we have is this downtrend line. See 1, 2, 3 hits, do the same thing. Fourth, breaking through it. Okay, actually, this is the go-to. And the reason why we like this candle to have scaled in on, now we're hitting resistance up here just because of that high pivot here. See, that was resistance. We ran up to it, pulled back. And also, it's a measured move that our members know how to put on the chart. And, that's going to be an area of, concern, but not, it's not going to start a bear market or anything, okay? As you can see, we've already hit it, pulling back a little bit, might have to consolidate, build a foundation, build a base, and then break through. But the reason why this worked, majority of your big moves are going to be off a big green bullish engulfing clearing takeout candle, whatever definition that you know it by. And it helps if you're in a narrow range before that happens, okay? And we were right there at the 20, so we had 3 different factors on our side, including breaking this down trend line, okay, to pop gold. Now, if we get the trifecta here, so to speak, stocks start pulling back a little bit, and people are more risk on right now than risk off. So if we get a little weakness in stocks, and then the DXY US dollar currency index, continues to show weakness, we could see continued upside here. Okay, even through, if we can break That's the third part. Break this little high pivot over there. Then we could run up into that 2,450 areas. Very probable at that point. See, but it all started down here. See that what we were talking about here, that narrow range consolidation zone. See right here, all of that is considered a narrow range consolidation zone. And where's your breakout candle? Yeah, a big green bullish engulfing clearing takeout candle that took out all of this stuff over there. Okay, and then let's go to silver if I can get out of here. Okay, there we go. And here, now we hit silver hit a lot more, times here, 1, 2, 3, 4. Well, we didn't really, I couldn't get this one back here because I don't want it, you don't want to go through a, a candle. Okay. So really, technically, according to classical technical analysis, 1, 2, 3, here's the fourth. But we're on a time count 1, 2, 3, 4, 5, 6, 7. The closer you get to 9, the higher the odds, higher probability you'll get like a pause candle, a little red candle if you're going up, or a green candle if you're coming down, and then you can move again. And this is a measured move here. Again, our members know about, and it has a 90% rate of working as resistance as price comes up. So there's a 90% probability when silver hits 31.81, we'll get a red candle, maybe a little pullback, and then hopefully continuation. So we're looking for something like we were talking about that W formation earlier, something like this. Okay, that low, pullback, higher low, and go. And again, it depends on a lot of factors there. Not a lot, but the DXY, the stock market, maybe people coming back into a risk-off situation, back into silver and gold. But let me see what else we got here. Yeah, see all this previous resistance. Then once we broke through, became support through here. Okay. And then that's what we're waiting on. We look, we kind of look at this as playing chess, trying to look at the next, 2 or 3 moves. And that's why we already have these measure moves above it and, possible, targets afterwards. But if we pull back and make a higher low, let me explain a little more. Up, down, and then this run here could be the same move as this one, if that makes sense. Okay, so let me actually measure that for you to show you. Oh, I need to go here. Okay, price range. Okay, we got that move here to there. So 11%. Now, the tricky part, normally we wait until it pulls back and then starts moving again, off that pivot. Let's say it comes back, just take worst case scenario, it comes back into this white line here. Because a lot of times, price will break resistance, come back, retest it, see if it holds the support, and go up 11. Let me try to get that perfect up there. Okay, 33. Okay, we could easily measure that measure and move. This makes sense. Okay, so you move up, come back, and then move up. So that leg here will repeat over there. Okay, and you can. I mean, we don't have time to do it now, but you can look. Even silver. We've done this for our members many times. Gold too. You can look back and see those move up, pull back. Well, we're here. I'll go ahead and do it for you. Move. See, that actually extended. This leg here was actually an overextension there. Okay. So yeah, they're all over the place. You just got to know what you're looking for. Okay. And then real quick, since we got you, we'll do micro futures copper. Obviously that was, the breakout zone here. Got over the 20. That's what we like to see. A green dashed line here, as well as gold or measured moves. Now what we're into now is that we had a pullback and then a push to the upside. Now this gold dash line is considered a shallow pullback, and it works the same moving up. Shallow pullback, And you want to, on the pullback, you want to stay, in the upper third of this run up. The deeper you go, the lower the odds, lower probability you're going to run back up very quickly. Now you can come back up here, but it takes a lot longer and take out that previous high, like this. This is to the downside up. And what we don't want to do is this here, where we come down and take out that low pivot here. And many times you take out that low pivot, this leg here will repeat over here, okay? Whether you're to the upside or downside. And that's what's cool about these charts, or the methodology that we teach. You just reverse everything. You only have to learn one system. Is very simplistic, hence the name. And then it works both to the upside and downside. Okay, so you're not having to learn, 15 different tactics to the upside and 25 different tactics to the downside. It's the same. You just flip the script, so to speak. Okay, so that's why we're pulling back here. See that little wick, at least today, shallow pullback, and that's what uh, we don't want to have that shallow pullback and then a continuation. So we'll be watching that. And also, in copper's defense, we're on a time count: 1, 2, 3, 4, 5, and it's normally 3, 5, 7, and 9. That candle, the one after, you'll get, and obviously colored candle. Okay, so and then we do have some of this previous resistance. See right here, we were you know, a lot of price pressure right there. Even going over here, I had to pull back, hit it again, and then go. See that W low, higher low. We took out that pivot there, and then here we go. Okay, so all this is real. It's simple, but it's not easy. Okay, you have to know the system, be able to identify it and name it, and that's what we do for our members. But all right, guys, thanks for watching, and we will see you on the charts.